Hi, and welcome to an early global view. It's currently 5 a.m. U.S. Central Time on Thursday, May 12th. We're coming to you especially early because we wanted to see if there was any follow through in the equities on the downside and other markets in their swings after yesterday's rather significant losses in the equities, and get that up prior to the Bank of England rate announcement and press conference at 6 a.m. U.S. Central Time. And here we are with the U.S. S&P 500 in front of us. And in fact, it is not down on any further follow-through. It is rather up 11 at 2069, and we will get back to that momentarily. And with that, we head over to the short-term view of the U.S. S&P 500. And as we said, that is up 11 at 2069. Still only a partial recovery of yesterday's loss, but most importantly, yesterday's failure was from back up into that key 2075 to 85 area, especially into the 2078 weekly chart failed up break. So if we take a look back, that correlated as the market topped out several weeks ago, remained weak on the ECB back on the 21st of April, tried to rally into the Bank of Japan and the FOMC, but really couldn't get significantly back above the top end of 2075 to 85, as you can see. Then, of course, once the market really digested the final central bank inputs at the end of last month, right there on that Thursday, in the wake of the in the wake of the BOJ, it finally broke down on short-term indications. Head and shoulders top, that's the blue neckline, and also the broader channel up that you can't even see the upper return line. That's back off to the left off the end of the chart, but this is the overall channel up since the last low down in the low 1800s. So it's a bit more of a true trend indication, not just short term, but all of that broke down right around the 2077 area. And that's what's so important about the failure of the aggressive uptrend going back to yesterday after the market stalled back in the 2075 to 78 area, both late Tuesday and into yesterday morning. Now, the other thing that happened is the market diffused the upward escape from the hourly MACD above its upper runaway band through the course of the day yesterday. Just didn't seem to reinvigorate the trading, and back below it, it's more neutral again, but that tends to lead toward downward corrective phases. So we have to see whether this can get above 2072 area, much less 2075 to 78. If not, we're headed back probably for the next test, which it already started yesterday, of 2060 to 55. Very important once again, with a 54 close on Monday prior to Tuesday's gap higher. And gaps out of 55 to above 60 have been a feature of this market. Much below that, it's likely to go back to the 2035 to 32 area for another test. And all of this should keep in mind the bigger supports down at 2010 to 2020. That pretty much does it for the short-term view of the S&P 500.